Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you the strat, but to teach you how to profit from the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Black on Twitter, or at sepiagroup.com. So I've been out for the last week, been a little ill, but we're back at it now. And let's see, working off a couple different systems. So let's see, hopefully you guys can see that. Since I haven't been trading, honestly, I have not, other than the Elon Musk noise, I haven't really kept up with what's going on in the market. Looked at it a little bit on Saturday with a few folks, but let me just look here. When I look at the cues, we'll start here with the broadening for me. I'm sorry, with the broader market. And we had our 3-day flip here. You can see this morning star pattern that set up here on July 6th. So if you're looking at this 3-day chart here, we had a 2 up that closed down, and then it went 2 down, and then 2 back up. And then on my daily chart, looked at it crossed above 0. You know, I call the area above the 0 line on the CCI opportunities to buy, so my buy zone, and below 0 on CCI, the red zone. But you can see the market has tried to, as it has done now in the past. You know, let me blow this up. It's kind of hard to see. In the past few trading sessions where the market has tried to make its move, got rejected. And so this is our daily chart. Okay, so this was March. So January is way over here somewhere. All right, so here's the start of the year. And you can just kind of see how our CCI tried to peak above the 0 line and got rejected a few times, crossed back over here in March and got rejected again. All right, and then it just kind of stayed in this pattern, that second quarter. And then here we are, June, peaked above it again, came right back down. And now we're in, what is it, July now. We're in the back half of the year. So we're in Q3. But we're not sure which way the market is going to go, right? So again, looking at our daily patterns, this is a outside bar and it went 2 up, crossed over the 0 line, 2 up, 2 up. Now it's starting to hit some resistance here. We drew this target a while back, right? The idea here was that if price was going to trade back into this range, because we had this gapper, it had to close this gap here. And so you can see it hit that level again here. And look, I get tempted, but didn't quite hit it on June 27th. Traded down, traded back up to that level here on, is that Friday, the 8th. Now we're in another 2 up. But as you can see, this yellow line here, guys, the market looks like it wants to trade back inside this gap to the downside. So not sure, but here's what you want to think about. You've had an outside bar that traded up, right? So let's just say 4 days of positive movement. Maybe it's taken a pause. I'm going to go back to my multiple time frames. Today is day 1 of a 3-day pattern. I mean, my 3-day charts here. So we have a 2 up bar here, and now price is trading inside this range again. Now, that does not necessarily mean it's going to reverse. So we have to be careful. It could reverse this daily, it could do anything, right? But know that for a continuation, you got to trade above this high. right? So that's what we do know. It could get stuck in this range, but it has to trade above this high for a continuation. And so that was yesterday's high, which is 296.75. So the way that I would trade this is if price traded above yesterday's high, obviously I'd look to go long. A potential reversal certainly is possible. But you want it to trade below yesterday's low. I want to see it for me to get comfort around CCI. I'm sorry, a continuing down trend. I like to see CCI trade back below 0, right, on the daily time frame, right? Because you can see it's hasn't crossed over on the weeklies, right? So the 1 week, 2 week, 3 week still looks pretty weak here, right? Big inside month, right? But we're not sure what's going to happen next, right? So we just want to be careful. You are hitting, so you did on Friday hit a level of resistance there. And so if it's going to continue, it's got to trade above Friday's high, okay? And SPY, same thing. It actually crossed above. You can see this big outside bar. Let me blow up SPY on the daily. Very similar, right? So price is trading above and below our 0 line on CCI. All that's telling us is momentum is pausing, reversing, short term. This is your January move here. And you can see how price was gapping up, very volatile moves, gapping back down. Here we had a nice run here in March, right at the end of the quarter, only for it to trade back down here in June. All right, that's May, sorry, June. Actually traded weaker than the Qs. So right back down. Now we're stuck in this range. So you have this outside bar here on the SPY. It's got to clear that to the upside or to the downside, right? So now again, outside and up, to up, to up, to up. So this certainly looks like, again, same 3-day pattern. Today is the new 3-day flip. If price trades below this level here, could go lower. But remember, this is your 3-day range here, right? So the start of this 3-day pattern was July 6th. So price will likely trade inside this range today. Else, if not, it'd have to break above Friday's high. Okay, so with that in mind, we're going to talk a little bit. I had an opportunity to talk with a couple ladies on Saturday, and so I think it'd be prudent for me to just share a little bit of that with you. And when I say a little bit, meaning how do you trade? So this is the question I want you to ask yourself. How do you trade a market when it's gapping around, from day to day? I mean, you're really not sure if you can hold it or if you can swing it. There's no clear direction in the down market. I think it's even more difficult than an up market. So here we are now. We're in an inside month. We're in a new day, new week. It's Monday, guys. What do we do today? So instead of me, and let me show you, there's not a lot on my screener. What I typically do, and I know a lot of guys will scan for like inside days, inside weeks. Understand, and I love those scans. There's a couple guys that I follow to get those scans. But what I will share with you is that doesn't tell you how to trade the open, right? So if you have an inside day and you say, I want to take this this trade, it's trading inside day, and I'm going to take the open of that inside day. That might work, and then again, it just might not. And what I will tell you, if you're trading options, you have to be really careful with those, because that first 15 minutes will get you. We may take a look at Meta today. Let me take a look at that, but I want to show you something on Snow that we looked at, because really what I really want you to get from today is trying to determine where you're going to take your actionable signals. And that was our message, right? What time frame are you going to take your actionable signals? And so we're going to talk about snow because this was an inside day. And so you're doing everything right. You're looking at the market, you're finding out what's happening, what's the news, anything, any Fed speak, anything that could impact the day. You plan, you draw your broadening formations, everything looks beautiful. And then the market opens and you're stuck like Chuck trying to figure out, what do I do? What do I do? How do I enter this trade? What? Guys, this is the difficulty in day trading. And specifically, if you don't understand the strat. Just because we draw our broadening formations, we have an idea of what what we want to do. That doesn't mean the market is going to open and do exactly what we want it to do. So we have to think through that. So and I'm just going to use snow as an example because it was an outside bar. Let's say you went and drew your broadening formations traditionally using the daily chart, right? And so you start high of this bar, right? And then you draw here the low of this bar, and we'd have to go way out. Let's say we'll take the high, hang on, let me see. Low here, 152.12, 152.63. So that's the next highest bar inside this range. So I'm going to take the high of this bar instead of going way out. All right, so let's just say, for grins, you just drew your broadening formation from this 2-up bar, right? Or traditionally, here's your 2-down bar, right? Because if you're on a daily, remove that. If you are in a daily time frame drawing your broadening formations, you're doing it from, why do I keep hitting the wrong one here? Sorry, this angle, right? So, okay, so your triangle says, your broadening formation on a daily chart says you're going to go from your outside bar or your 2 up, 2 down. So here is your 2 up, 2 up, 2 up, 2 down. So this is the highest. So I'm not counting this bar because this is where we're going to look at the trade. This is your 2 up bar. This is an inside bar. All right. And this is your, so higher high. This is your 2 up before it went inside. So this completes your triangle. All right. So you're going to draw from the high of this bar back to the next highest bar inside this range. And this is your 2 down bar. Right. Because this is a outside, 2 down, 2 down. It went 2 up. So that completes the try here. So you draw your broadening formation from the low of that bar back to the next lowest bar inside this range. Well, here's a challenge. This is a daily broadening formation, which could take days to complete. And the idea is you're trading reversals off of these broadening formations, right? That's why we draw them. We're looking to trade reversals off the broadening formations. All right, so here's what happened on Friday. All right, so now let's take a look at it, because remember that went inside. So you got your broadening formation set up, and then this happened. Well, it didn't even trade up to that line until the bottom of the hour flip, 10:33, 10:30, right here. And it did not immediately reverse. This was an inside bar. So there was a whole lot of action going on here before it even traded up to that level. It continued, right? So broke above it and didn't reverse until you had this inside bar to the downside. All right, so what we're talking about is, how do you determine whether or not you want to get into a trade, which time frame you want to enter off of? You know, do you just skip it all together because you're looking at this and you're saying, well, wait a minute, it's trading inside a daily range. Ask yourself, are you looking to enter your trades off of a daily chart? Yeah, inside day, and looking for your signals there? Are you looking at it off of a 60, like an inside 60 or 32260? Is it a 30, like an inside 30 or 212? Well, that being inside 322, a 222 on the 30. Is it the 15-minute, or is it the 18-minute as I choose? That's the question you have to ask yourself when you're looking to trade. So we set up our day, and then we are looking for actionable signals based on the direction we think the market is going to move. Okay, so think about that. Here on the daily, we were looking at a 2-up inside bar, potential 212 continuation with CCI on the daily on SNO above 100. So I'm in my mind, I'm thinking, you know what, there's potential to go long here with, now, we all know that this year has been a mess, right? Tumultuous year. So we're down on the year, but we have time frame continuity as of Monday or July 1st, July, whenever the market flipped. Yeah, here, you went green on the quarter, right? Remember, this started a new quarter. So we know that we are in time frame continuity other than the year. So maybe we should look for a long position here. Now, you guys know I don't like trading that first 18, 15 minutes. And then, of course, here's the 90 above 100. So in my mind, I'm thinking I'm gonna go long here. So I start with that, guys. Where's CCI? Where's momentum telling me on the longer time frames? Of course, I'm looking at my my broadening formations, and now I would have drawn this a little differently, but I would have said, you know what? I want price action to trade outside of this inside day, because I don't like that. But when you see a move like this, the idea is that you get into it as quickly, as early in the move as possible. So now this is really my question for you guys. I'm not going to be able to answer this for you, but I'm going to show you. I'm going to throw up the 15-minute here. And I'm just going to simply say to you, here's what I think. If you are looking to day trade, I would either be on the 18 or the 15, right? I think 30 gives you a pretty good perspective, especially on the reversals, but I'd use the 60 and the 90. Okay, so when I'm looking at this trade at the open, and I'm saying, hey, if price doesn't trade below this low, then I'll look for an opportunity to go long. So if it trades below, and I actually look at this day's low here, if price trades below, let's call it 152, then maybe there's potential for this to go short with CCI trending down. You know my rules. Here's the 18-minute. It did not trade below that range, but look what it did do. It traded down. And so if you're waiting now for your 15-minute flip, so that's right here, you have this 3, 2. If you look at CCI, it's below -100. CCI is coming back upside, back inside, back above -100 on the I'm sorry, the 3-minute. This is why using those shorter time frames are important, because it's going to tell you the momentum in the short range. Long range, you may be looking at this and saying, looks like it wants to go higher. This is intermediate. This is in conflict. I'm going to go with time frame continuity to the upside. Hold this. If you were to get in right here, you have to know when price trades back inside this range. So remember, the range is here. This is your 15-minute range, right? So this is your 15-minute range. Let's see, 3. Let's see, I can bring that down to this low. Okay, I got snap and glue on here. All right, so this is your 15-minute range. There you go. This is your 15-minute range. And so if you were to go through 2 down, remember, this is a continuation. You had your reversal here. This was 2 up, 2 down. So in that first 15 minutes, that was your reversal on that 15-minute chart. But I wouldn't take that gapper and try to enter that trade in the first 3 minutes. And then you see it go inside, inside, inside. Then it goes outside again. This is your next 15-minute flip. This, guys, is a 2-2 continuation. This is not a reversal, it's continuation. It reversed the first 15 minutes. Now you're in a continuation pattern. Those are tricky. So, but if you were to have gotten in here, this is where you want to start looking at when this thing comes back up, guys, you're right inside. This is your 15-minute range. So when we're talking ranges, you want to understand what that means. That's why I say first, not the first, but you absolutely have to understand which time frame you're looking to take your actionable signal. If it is the 15-minute, then you do not have a signal here. So if you look at this and you say, oh, the market's going down because Didi said CCI is below negative 100, let's jump in here. Well, this is a 2-2 continuation. That's not an actionable signal. Well, it is, but you have to decide whether or not you're looking for continuation patterns. And if you are looking at continuation patterns, you better believe you got to get it on the higher time frames. You got to be in time frame continuity for continuation to give you your best opportunity. I prefer reversals. So this is not a reversal here. You're at continuity now. I mean, you're at 2-2 continuation. If it's not the 15-minute chart and you're looking to go lower because you're that person that says, nah, I can trade the shorter time frames, have at it. I will certainly not be the one to tell you can't do it because it is possible. I just can't. All right. So you had a 2 down, inside, inside, 2 up. Ask yourself the question. What confidence do you have that price action is going? Because now this would be a reversal on a 3-minute time frame. If you're not paying attention to what's happening on these longer time frames, it'll be quite difficult for you to be successful here. All right. So if you look at this and you say, well, this is a 2 down candle, I'm looking at a continuation, then you shouldn't be trying to trade this to the upside. You're looking for a move to the downside. So on this flip, and that's why I prefer the 15-minute, I like the 18-minute, but the 15-minute, every 15 minutes, you should be looking at the market and saying, and Rob always says this, and I think it goes unnoticed, what's the next 2? In the first 90 minutes, which is why I try to get my profit in that first 90 minutes. In that first 90 minutes, I'm looking at this and I'm saying, okay, well, what's the next 2? But I'm looking at it on the 18 because these are both multiples of 90, right? 4 and 5. So I'm looking at this and I'm saying, I said 4 and 5, 6 and 5. So I'm looking at this and saying, what's the next 2? So if you're in a 2-2 continuation to the downside, you're looking at your 3-minute chart. You have to go down to a smaller time frame, whether it's the 3 or 5, to get those entries on a continuation pattern. Okay, I'm going to say that again. If you're trading continuations right? What's the next two? You have to go down to a 3 or 5, maybe a 6, to look for your entries to get into these patterns. Why? Because your signals, you're not getting signals on the 15 or the 18. These are continuation patterns. Okay, these are continuation patterns. So you have to go down to a 3, 5, 6 to enter that trade. Here's now your reversal at the top of the hour. And we're going to talk about this. So in the 15-minute, it's at 10 o'clock. On the 18-minute, it's at 10:06. It looks a little different. Here's the 10 o'clock move right here. Guess what, guys? You're at a 2-2-2 continuation on the 3-minute time frame. Okay, I'm going to say that again. This is a reversal now at the top of the hour. So you had a 2 down, 2 down, now potential 2 up. Remember, this is your high, so it hasn't crossed. Wait a minute. No, here's your high on the 15-minute. 9:45. This would be your high, right? So I'm just going to draw a line here. It'll be easier. All right. So we know when price crosses back above this level, this line, you're at a 2 down, 2 down, 2 up, 2 up reversal on the 15-minute. So where does it hit? Here's your 15-minute flip right here, 10 o'clock. All right. Also your 30-minute flip. And let's say you take that off the high of this level. It goes 2 up, it goes 2 up, and it goes 2 down. Oh my gosh, you just got triangled out. Right? And you're thinking, this sucks. It didn't work for me. Here's what I want you to think about. This was a 2-2 reversal on the 3-minute. You have to understand these ranges on these multiple time frames. If it were that easy, we would all be so wealthy. But here's what happened. The 3 reversed here at 9:54. You can see that crossover. First here, and you can see it come back inside this range. Again, asking yourself the question, are you taking your signals here off of the 3-minute? Because if that's the case, you gotta be real good. Or are you taking it off of a longer time frame? So that's where I want you to focus. If you don't get anything else from me today or ever, it's you have to decide which time frame you're looking to take your signals. All right. So if the signal is off the 15, then you also have to look for your TTO on the 3. So it traded up. Had this been at 10 o'clock, a 2 down bar, then you could have taken that 2 down, and then at 10:03 went 2 up. Now you have your TTO on the 3-minute time frame. You could have entered that there. But here instead, you have a 2 up, a 2 up, a 2 up right at the flip. It takes that high, right? So it would have triggered your entry, went 2 up, came down. Depending on where you had drawn your stop, it would have taken your stop maybe, especially if you're that person that says the stop is the open on the 15-minute. Maybe it would have taken that, yeah, because the open was 154.90, 154.95. Oh man, it just missed it. So depends, this market makers see those orders, they'll take it anyway. So it traded down to it, didn't quite take that open on the 15-minute, and then you saw your move. All right, so here's what I want you to take from this. If your signal is on the 15 minute, 15 or 18, then use the 3 or the 5, and maybe that looked a little different. We'll just throw the 5 up here. Use the 3 or the 5 for your entry, meaning you're waiting for the 15-minute flip, and so you don't even get it here. This is the difficulty, that's why I prefer the 3. But you can see here you have your 2 up, you're two up, you're two up, you're two up. You never got a two down until way over here at 10:20 on the 5-minute. And that would have been an ad, or you could have entered here as well if you had missed that whole move. But on the 3-minute, you can see this slight hammer counter shooter right here. And you could have entered right here at 10:09. You don't see that on the 5-minute. All right. And then you got your entry here, crosses back over to to what I call my buy zone, which is where I like to wait anyway. And then the market takes off, comes back in. So here, now we're on this next flip, right? Here's your 15-minute flip. What's the next two? So if the market comes in on you, you have a decision to make. There's a shooter here. If it were me, I'm probably out just because of the way the market trades. But if you're looking at this, you're saying, yeah, but Didi, it's crossing over 100. It's like, you know what? I think it's going to continue. You can hold this. That doesn't mean this won't come all the way back down and go all the way back up. But that would be your decision. I'm in the camp where I just kind of take profit and get out and get back in. But because I don't know this right at the time. So when I'm looking at this, I see the market forming this inside bar, it crosses back over, and then I jump right back into the market. So probably not making the most out of my profit. But at the same time, when you're trading options, especially on Friday with theta, you know, it's for me, it's just not worth the risk. If it's early in the week, maybe I hold this trade, but on a Friday, I probably would not. All right, but I hope you can see that this is what I want you to get from it is you don't have an inside bar here. You have a 2-2 continuation. If you're going to trade continuations like you do here, you have to get your entry. So again, right here, 15-minute flip, price came in. Let's say you missed this move here and you see CCI crossing above 100. You're like, yeah, I want to get in. Now is not the time. Now is not the time. You had this big move here, two up, 15-minute flip. This isn't where you want to enter. TTO. Excuse me, guys. TTO, say TTO, triangle layout. You want to wait for price to come in on these shorter time frames. You got your inside bar, now you're entering. So you take that two up on that 15 after the triangle layout, hold, here's your next 15-minute flip. This is at the bottom of the hour, still good. You don't have a two against you, you have this little, and this, now you're finally at our broadening formation right here. If it were me, I'd look at this and say, if price trades takes this two down, I'd exit. It did not. It held, traded up to your next flip, 1045. This two against you, price comes back in. I'm exiting this position. Now I'm looking at, where's my 90-minute flip, guys? You're really close. And here's your 11 o'clock hour. All right, so here's what I want you to take away from this. We're going to wrap up. This is really this training day because I haven't had a chance to really look at the market. First decide, and I'm going to throw these up here because it's your decision. Are you looking at the 15, the 18, or certainly the 30 or the 60, depending on your work schedule? You know, you may not have the opportunity to trade all day. You can certainly just trade reversals in the afternoon. I like the 12:30 and even the 11 o'clock reversals on the 90-minute flips. All right, but on open, we're waiting for that 15-minute close, and then ask yourself, if this goes two down, this is a continuation. Is this something you want to play? And if the answer is yes, I think the market is going to continue to go lower, given that, you know, remember, we drew our broadening formations on this daily. And you say, well, yeah, I think the market is going to go lower, or no, looking at this, I think the market goes higher. Then don't try to take this trade. Don't try to take this two down. right? You're inside this range. Don't try to take that 2 down. So use the logical methods to we call it the if then kind of method of trading. If this happens, then I'm going to do this. And in this case, if this trades below 152, then I'm going to do this. It did not. So now I'm just waiting to see. I got to wait for this top of the hour to see what's going to happen now, because this came down and then came back up. Top of the hour trade, this flipped significantly. Now the question is, does this trade higher? And that's when you start looking for potential reversals. I'm looking at CCI to see if there's a momentum shift. There is. Price is going back above 0 on CCI. And that's where I'm looking to take my entries. Not right at this flip. Not right at this flip. And then I'm saying to myself, I need a TTO, I need a TTO. So in my mind, that's either an inside bar on the 3, or that's a 222 or 322, right? So triangle layout 222, this is where I want to enter. If there's an inside bar like here, 2, 2, inside 2, I'm good there as well with range, right? So you have to understand, if you're close to your broadening formations, maybe this inside bar is not a good trade. But when you look at this, you say, here's where I'm looking for it to go. I got some range in here, a couple dollars. I'm going to take this. And this inside bar be your stop loss. All right. Okay, so I'm going to leave it there since I am in recovery. But I hope this was beneficial because I think oftentimes we look at the dailies, these inside days, or even the 322s, and we want to jump into the market only for the market not to tell us what it wants to do at the onset. We have to be patient. And sometimes that does mean waiting till the top of the hour. And then you're just using your every 15 minutes. I'm looking every 18 minutes. I'm looking to see if there's a trade. And if you were in the 18-minute flip, you would have been right here at 10:06 where it went 2 down. So that would have avoided that risk, which is why I prefer the 18-minute. I've seen like I have fewer sub-tries that I have to manage when I use the 18-minute. So this was a flip here at 10:06. And you can leave both of these up, because there are opportunities. Sometimes you see an inside bar like here on the 15-minute that you don't see on the 18, right? So they both have their advantages. All right, so here would have been my entry right off of this guy. And then on the 18-minute right here again. So instead of the 15-minute flip being here, this is the 18-minute flip here at 10:24. Okay, and so just look at that, and I want you to study these charts and say, okay, man, just really hone in on which time frame am I looking for my signal. But if you're looking for your signals here, then this is where you want to really, your short time, drawing broad informations mean absolutely nothing. Don't worry about it. You don't need to do that. If you're trading off of a 1, 2, 3, 4, 5, I know guys who do it. So this is not as important if you're trading these short time frame. Broadening formations aren't as important. But if you're scalping like a 3-2s, I would do it just to see how far price action could go. Say, okay, it breaks above here as an example. If you were just scalping here off this 3, 2 up, 2 down inside bar, and you say, okay, it's holds here, I'm going to hold it. But otherwise, you do not necessarily have to draw your broadening formations at the start of your day. But that's not the way I trade. I look for my signals off of the 1890, because I like to trade the 90-minute reversals. And so I like to get a move in the first 90 minutes. And that's what we got on Snow here. The 90-minute flip was here. So I'm looking for something like this in that first 90 minutes of trading where I can capitalize on those profits. Okay, so I'm going to end there. with my favorite scripture, Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. And so just again, first decide which time frames, okay, you want to trade, and then be patient, right? What, I mean, time frames you want to get your signal. So if you're looking for a signal off the 15, that's going to be a 3-2-2, right? So that's a reversal on the 15, 2-1-2, or maybe even a 3-1-2 on the 15. Keep in mind though, with the inside bars, they can be continuation patterns or reversals. So be careful with that. You want to align those your strategy with the broader market, meaning, you know, what's happening on the 60-90 daily, right? Before you decide to jump in. Okay, you got this. Just be patient. All right, thanks for joining, everybody. Take good care.